Okay, let's start with introductions, okay? You guys are gonna be able to introduce yourselves much better. So Albert, you don't mind?
Sure. Hi everyone. Great to be here, and thanks Oscar and the Orbit team for having me. My name is Albert. I am a managing director at a European fund called Eurazeo. I'm based in Singapore. We are an investment company. We're managing about 35 billion in AUM across a number of different funds, two of which are actively investing in Southeast Asia right now. So one is a smart cities fund, which is looking at climate change, EV, sustainability type themes, and the second is InsurTech fund, which is the one that I'm directly involved with. So I've been in VC for about 10 years in Southeast Asia, and yeah, looking forward to the panel ahead.
Thank you very much, Albert. Field?
Cool. So I'm Field Pickering. I set up Volpes Ventures, which is the venture arm inside of Volpes Investment Management, which is an alternative investment group based here in Singapore. And we saw an opportunity in the early part of COVID in March, April 2020, when venture investors were trying to figure out what impact COVID was going to have on their business, and people weren't investing. We raised a little bit of money and started actively investing. And I've continued to do that, and we've invested across 2 funds, early stage, Southeast Asia and Australia, soon moving on to our 3rd fund.
And what are the topics that you're interested in investing? What are your key areas of interest?
Well, funny you should ask. So we've been talking to investors over the last 6 months or so about what comes next. The first fund obviously had a specific opportunity for us to invest during COVID. Either COVID is going to kill us all, or it's going to be early 2020 is going to prove to be a good time to have been investing. Our second fund was really just a continuation of that as we worked ourselves out of the pandemic. And then talking to the investor market now, it seems that the venture capital ecosystem is oversupplied with venture capitalists, so they want to see something different. We have always invested in our portfolio in over 20% female-backed companies. And when you look at those companies, they actually outperform the rest of the portfolio. So we are now focusing on gender diverse leadership teams, and that's going to be the theme for our next fund.
Good. Thank you, Phil. Shannon, thank you very much for coming today. Fun story. I gave Shannon the wrong date, and luckily she was able to make it today.
Hi everyone, I'm Shannon. I'm from MDI. So our HQ is in Indonesia, but I'm based here in Singapore. We started in 2016 as part of as the CVC for Telkom, generalist fund, and that fund was anchored by Telkom for 100 million. It was a balance sheet fund. Since expanded, today we have about 850 million in funds under management across all the way from, we have an angel group all the way to pre-IPO. So we are full lifecycle investors. Depending on which fund we deploy out of, it might be a synergy fund, but it might also be a generalist fund. Continue to build out the platform. Most recently, we started to help launch thematic funds for other corporates, mostly from Indonesia. So we have telco fund, we have energy and climate fund coming up. We also have an agri and biotech fund coming up. Yeah.
Thank you, Shannon. Maybe you have the microphone. We can start from you. So this year has been a year that, well, let's say talking about interest in venture capital has been complicated because there's been really like the lowest level of activity in terms of investment. Still, a few companies have been able to raise, and there's some sectors that have been performing in terms of activity much better. So for MDI Ventures, for Centauri Fund, for you, Shannon, what are the areas that you're most excited about? What are the industries that right now you are really spending time exploring opportunities?
Okay, yeah, it's quite a few questions in there. So yeah, so I spent most of my time on Centauri, which is the Series A/B fund. When we started that fund, actually, it was supposed to be more Southeast Asia, but then COVID came, so we shifted gears a bit, and we were kind of like, okay, let's invest a little bit more into Indonesia. So I would say 60-70% of the fund is deployed into Indonesia. We have slowed down quite significantly. I wouldn't say just in the last 1-2 years, but actually 3 years. But we see things kind of starting to pick up. I think part of the advantage of being full life cycle is that we can see activity across different funding stages with the angel syndicate, angel group. we see an uptick, not just in terms of the deal flow that we see, but also deals that are actually getting invested into. So we expect that, you will start to see some of that trickle down into the later stages. In terms of what we are excited about, I think a lot of people know that we have been investing a lot into agri, aqua, forestry. And this was something that people were not investing in prior to COVID. So I think there has been a shift in the verticals that people invest into. We see a lot of existing traditional businesses thinking about new ways to new approach to their business. In the last 1 year, one space that we've seen a lot of companies in has been in waste management and recycling. I think Orbit has invested into Octopus. Our angel group is also in the midst of closing a deal in the space. On the fund side, we're still thinking about our thesis in the space and where exactly in the value chain we want to invest into. I think prior to COVID, the approach was that you invest into a company early, raises a lot of funding, and then it hits the full stack. So it just moves upstream and downstream. But given how things are slower today, then I think we have to be a lot more considerate on our approach when we're investing. Another space that, actually I've been going on for a while, but yeah, so another space would be EV and battery continues to be super hot. So this is something that's been quite hot, not just in Southeast Asia, right? But I'm trying to speak a little bit quicker, not just in Southeast Asia, but globally. I think this has been, and I think we need to be recognized that just because something has worked in, say, a Western country doesn't mean it will necessarily work here. Also, because different jurisdictions have different regulations. So that's one consideration. Another consideration, I think, in this space is that the timelines to exit might be very different from what traditional tech investors are used to. So that's one consideration on whether you even want to be in the space. One way we manage this is by launching those thematic funds, which have LP base and a mandate that is comfortable with that extended exit timeline.
Thank you. So Phil, what area, you mentioned that you're very excited about gender diversity in terms of funders, but is there any particular industry or area beyond that is now where you're spending time evaluating companies?
No, we tend to be pretty sector agnostic. I think our focus is Southeast Asia, Australia, New Zealand, and I don't think any one of those markets is deep enough to focus on any one country or any one sector. So we're looking for great founding teams that are growing scalable businesses that are priced reasonably, and we tend to go early stage. About 72% of our 44 companies are at the pre-Series A level.
Okay, so mostly looking at early stage, almost anything that could be interesting. What areas are you in your portfolio? Is there any particular area where you're seeing more activity right now? Like sometimes it's not so much about what you look for, but then you look back and say, well, I realized that I the same way that you mentioned, like female founded startups, they've been performing better. So is there, of your 42 portfolio companies, is there any concentration, any area where you have more companies?
Yeah, and again, this is sort of accidental. But we have about 30% of our companies related to the F&B industry in one way or another, whether it's cloud kitchen or like wholesale aggregation, commercial fishing marketplace in Australia, reservation system. So for some reason, and obviously the pandemic wasn't great for this industry, so maybe there was a kind of a rush towards the end of COVID and beyond. But we tend to do a lot in the F&B innovation companies that are innovating, bringing greater efficiencies to the whole F&B supply chain.
Yeah, definitely. If I think about Southeast Asia, food comes always as a very, very interesting and very exciting aspect to it. Okay, Albert, what about Erasio? What are you spending time?
Yeah, sure. So I think we're actually taking a slightly different approach at the moment in Southeast Asia, where both of our funds are pretty, I would say, somewhat more sector specific. Actually, I know that my colleague Ernest is sitting in the back there from Smart Cities. And so that fund is more around thematics around climate change, sustainability, EV, autonomous driving, things of that nature. The fund that I'm focusing right now is much more heavily looking at insurtech. And so we've been quite deeply looking in and around that sector in Southeast Asia and India. Emerging markets is our main focus.
Anything particularly in insurtech that has been more that you think there's more opportunity, some like sub vertical maybe inside the insurtech space where you're bullish in terms of the opportunities?
Sure. So yeah, we've actually made a couple of investments already and are actually closing another one this week in this region. But I would say I think historically distribution has really been the biggest kind of, I guess, low-hanging fruit, right? So whether that's through agents or whether that's embedded through e-commerce platforms or otherwise, just really being able to offer more insurance products to customers here, oftentimes for the first time, has been just kind of the easiest approach, and that's relatively basic, like a motor insurance product or a health insurance product. I think, but I think there the innovation or the value is really around being able to do a better matching between what's being offered and what customers can afford and what they're looking for, and being able to offer much easier and much more cost-effective access to those plans. So I think that's where we've been primarily focusing. But I think once you start to go a bit, once the market starts to mature a little bit more, then you can obviously start looking at more innovative products. You can start looking at maybe underwriting. So there's a kind of a lot more depth that you can go into, but it's I think in a relatively underpenetrated market like insurance, it's kind of very step by step.
It's very interesting because I mean, in the last month, I spent time across many countries, and these type of panels about what are you interested in investing in, they became a bit boring because everybody was always saying AI everything, was always AI. So it's very refreshing that we're able to talk about something else, that it's not just AI, no? And I like how it's all about all of these industries where across this region there's a huge opportunity for improvement, and you don't necessarily need the latest technology, but you need to make sure that technology drives value.
Yeah, no, I mean, I think to the theme of Orbit in terms of focusing on emerging markets, I think that's still where most of the opportunity lies, right? I mean, we've seen that in Southeast Asia as well over the past 10 years. That obviously having access to some of the more cutting edge trends and technologies can be nice in certain instances, but I think by and large, the majority of the value has been through just good execution, finding good openings in the market and being able to kind of identify the right teams to be able to execute on that.
Okay.
I might add. Yeah. So. Actually, prior to COVID, we invested into quite a lot of AI companies, which all came back to life with the recent trend. But I think we're beginning to see that when someone calls themselves an AI company, is it more of a feature rather than really truly an AI company? It's just when everyone first started going online. And you have e-commerce companies also being called tech companies just because they had a website. I think it's going to be the same for AI, where a lot of companies are going to have AI in their just standard processes, but that doesn't mean they are AI companies. So we need to make that distinction.
Yep. Well, just to wrap up, try to make things more tangible. No, it would be great if you can select one of your companies, one of the companies that you're particularly excited, maybe one of the companies that reflects on these trends that you share, and explain to the audience what does the company do and why you were excited particularly about that company. I mean, your thesis behind the investment.
Since I have the mic. So actually there's only one company that, I should say right now, because they just IPO'd last week on NASDAQ, WeBuy. So social commerce company. A lot of people had said in the last, I think 1-2 years, social commerce does not work. Part of the reason I feel, it's because they invest into a lot of social commerce companies that end up shutting down. But I think just because you invest into something that shut down in a space doesn't mean that the entire space does not work. One thing that I thought was very fortunate for WeBuy was actually that they were not able to fundraise so easily because everyone else was shutting down. So that forced them to really think about the operations and managing the company, and they cut burn dramatically. They ended up seeing cash flow positive months, but they still continued to grow. And given that a lot of their competitors shut down, then they managed to acquire all their customers.
Yeah, sticking with the F&B theme, there's a company in Australia, and we invested very early on, called Moneta Seafood. And the first business plan or strategy was an e-commerce business for the seafood industry. Super founder. Obviously, Australians like to eat a lot of seafood, but we did question how scalable it could be, how big he could get an e-commerce platform for seafood to be. And we pushed him to think bigger. And today, he controls over 50% of the seafood market in Australia, and he's created a platform so that commercial fishermen, as they're coming to shore with their catch, can open up the app, and if they want, they can sell it right through there, and they find the buyers, they do the cold storage. The company's grown so big that they've actually raised money, which the company manages, to buy species licenses, which they lease back to the fishermen, so long as the fishermen put the catch on the platform. So the guy knew that the seafood market in Australia, which is the second largest globally, was ripe for disruption. And the point at which he started is not the point at which he continues, but at least gave him a start. So it just shows that if you back the right founders and you back them early, there's a lot that they can do if they find that their right niche.
It's a huge opportunity, in very traditional industries where the inefficiency and especially when you have like this small, very fragmented type of market, just pulling together resources and create access to more opportunities, it creates value for everybody in the new value chain, especially for consumers and then also like the suppliers in this case. No, very interesting case.
Yeah, I mean, just to finish up on that, like, so fresh seafood actually is about 14 days old by the time it gets to your table. And if you eat fish from the Monetas platform, which 50% does come from that platform in Australia, you can actually, through the blockchain, find out what boat and where the fish was caught, which is kind of interesting.
I'm always impressed about the amount of things that you can learn in a pitch from a startup about many things in any industry. Albert.
Yeah, so I guess I can talk about the first company that we invested in from the fund, which is also an MDI portfolio company called Koala in Indonesia. I think going maybe back to the thing that Field also said around the founders' adaptability. I think this is a company that currently helps manage around 40 to 50,000 individual agents in Indonesia and in Thailand, which enable them to sell insurance policies. But they started off as a micro insurance provider. So they would sell things like movie ticket insurance if you missed your movie because of the traffic in Indonesia. And I think during COVID, they kind of realized that this product was, while innovative, was not really very scalable in the sense that you'd have to sell literally millions and millions of these policies in order to get any real scale. And so they pivoted their model to then focusing on agents, selling more traditional types of insurance like car insurance, health insurance. No, they still do some of the embedded stuff as well, but I think it kind of reflects that the market in emerging countries like Indonesia is still very early, right? And you need to build a model that works within the infrastructure constraints. And secondly, that you have to keep thinking about how to, I guess, adapt your business model to wherever I think you can find growth and you can find the right level of I guess profits from the market as well.
Cool. Well, I think this is very, very interesting. Like final takeaways from the sharing, like starting from here. I mean, the idea of like knowing that where you start, you don't know where you're gonna end, and you need to be open to explore opportunities and learn from what you're seeing and adapting. Quite critical. Like don't discard like very traditional industries, because there may be massive opportunities there if you're able to create the right tools. And then, well, this is something that as VCs that we provide capital to companies might be weird, no? But in this case, like seems that having limited access to capital was critical for the success of that company. So with that, we're going to wrap up the panel and then move on to the presentations. But before we do that, please, big applause for our panelists today for sharing and for coming here. Thank you, guys.